Thank you all for joining. We'll get started in a few seconds here. All right. Good afternoon, everyone. On behalf of the University of California Disaster Resilience Network, UCDRN for short, the UC Berkeley Center for Security and Politics, as well as the California Council on Science Technology, CCST for short, I'd like to welcome everyone and thank you for joining us for this important and timely discussion. I'm Julianne McCall. I'm the CEO of CCST, and I'd like to open our briefing today by acknowledging that we are participating from different locations in what we now call the state of California, which is home to many indigenous communities who have stewarded this land since time immemorial. CCST is a nonpartisan, nonprofit organization established in 1988 at the request of the California legislature. We were created to provide science technology advice directly to policymakers from the outstanding community of academic and research institutions in our state. California is so lucky to have such an incredible network of expertise, and our job at CCST is to help amplify and translate the expertise in this network into actionable advice for policymakers. We do this through a number of mechanisms, including briefings like the one you're attending today. We also host workshops, write peer-reviewed reports similar to the National Academies, and run the CCST Science Technology Policy Fellowship Program, which places PhD-level scientists and engineers in the executive branch and the legislature for a year of government service and leadership training. Today's webinar is the second event in a year-long series discussing the ways that disasters and climate impacts are affecting where people choose to live and work. The panelists will offer different perspectives on how disasters are affecting housing supply, land use decisions, and insurance rates in California and beyond. Tragic events such as the devastating fires across Los Angeles earlier this year have forced us to think critically about the human, economic, and environmental toll of disasters. And they serve as a reminder of just how much still has to be done to build resilience in California. I'd like to thank our wonderful partners who've been thoughtful collaborators in every sense of the term, the UC Disaster Resilience Network and the UC Berkeley Center for Security and Politics. I'll now turn it over to David Oglesby from the UC-DRN to say a few words about the network, as well as the UC Berkeley Center for Security and Politics. CSP's Deputy Director, Angelina Soldados, was unfortunately called away last minute, so she won't be able to join us today. All to you, David.
All right. Thank you so much, Julianne. And thank you all. It is an honor to be here with you today for this fascinating panel discussion. My name is David Oglesby, and I'm chair of the executive committee for the UC Disaster Resilience Network, or UCDRN. And I'd like to thank all of you for being here, and a special thanks to our panel for bringing their expertise to such an incredibly important and timely discussion. So we're in an era of compounding disasters and polycrises, which requires an all-hands-on-deck approach to dealing with them. To establish and maintain a resilient and sustainable society in the face of floods, heat waves, droughts, earthquakes, and the accelerating effects of climate change, we need robust cross-sectoral coordination across disciplinary, geographic, and other boundaries. The UC Disaster Resilience Network is dedicated to studying and finding the solutions to the compound effects that lead to these problems, breaking down the institutional and disciplinary boundaries that interfere with a coordinated approach. And for those of you who might not be totally aware, the UC is composed of 10 campuses with over 26,000 faculty and almost 50,000 other researchers and academic staff, producing around 50,000 scholarly articles each year. We have amazing expertise in the science, social science, economics, and policy of disaster resilience, but we need to make sure that this work is useful to the people of this state, this country, and this world. And so to that end, UCDRN is a network of faculty, students, researchers, and staff in the University of California across the whole system that are bringing the research strengths of the system to the stakeholders who need up-to-date information to address hazards of all types. We've incubated and spun off critical research and in both applied and theoretical. We are working closely with key partners, including the UC Office of the President's UC Online initiative toward building academic offerings in disaster resilience studies and a statewide certification program in disaster resilience management. We're also really proud of UCDRN's diverse portfolio of cross-sectoral partnerships, which run the gamut from the private sector, such as Ernst & Young's Open Science, AI, and Data Challenge, NGOs such as the American Red Cross's Disaster Preparedness Center in DC, global university partnerships, including with the University of Chile. And of course, it's an honor and a pleasure to work with our colleagues and friends here at CCST on this critical expert panel series. And sort of taking off my hat as UCDRN executive, I'd also like to introduce the Center for Security and Politics at UC Berkeley. Founded by former Secretary of Homeland Security and former University of California President Janet Napolitano, the center's mission focuses on addressing critical national and global security challenges surrounding climate change, democracy, and technology by bridging academia with the public and private sector and providing innovative, actionable solutions for policymakers. And with that, I'll turn things back over. Thank you.
All right. Thank you so much for your collaborative partnership on the planning of this inspired series. So today we're focusing on how disaster and climate impacts affect housing supply, land use, and insurance costs. I'd like to now introduce our moderator, Doug Parsons. Doug is the founder and host of America Adapts, the climate change podcast, one of the world's leading podcasts dedicated to climate adaptation. Through his podcast, Doug has interviewed hundreds of experts from top scientists and policymakers to grassroots leaders, elevating critical adaptation conversations to a global audience. Before launching America Adapts, Doug built a career in climate adaptation, working in Queensland, Australia, on agricultural climate impacts before becoming Florida's first ever climate change coordinator at the Fish and Wildlife Conservation Commission. He later served as a climate change liaison for the National Park Service and as North America Policy Director at the Society for Conservation Biology. Now, through America Adapts, Doug continues to amplify the voices of those driving adaptation solutions. We're honored to have you, Doug, and thank you so much for moderating this webinar.
All right, fantastic. Thanks for that introduction, Julianne. Well, hi, everyone. Thanks to the organizers for having me on again. This is the second one that I'm doing, and I really enjoyed the first one. All right, so let's get started. Across the country, communities are grappling with increasingly severe climate and disaster impacts, driving up housing costs, spiking insurance rates, and reshaping land use decisions. These pressures are forcing tough choices about whether to stay in place or relocate from high-risk areas. Today, we'll explore how local and state leaders can get ahead of these challenges using innovative land use strategies, zoning approaches, and financial tools to build smarter, safer communities. And don't worry, I'm just a moderator. The real experts are coming up, so let's meet our panel. First off is Molly Mowry, and she's the Executive Director of the Community Wildfire Planning Center. Michael Peterson serves as a Senior Deputy on Climate and Sustainability for the California Insurance Commissioner. Oh, we'll have some good questions for you, Michael. Dr. Judson Boomhauer is an assistant professor in the economics department at UC San Diego, and Sarah Atkinson is the senior policy manager for hazard resilience at SPUR, a Bay Area-based public policy organization. So I'm going to ask each of them to give a little bit more background on what they do. I did not want to do that, so we're going to just start this off just a minute or so. Molly, can you kick us off, give us a little bit more background?
Sure. Thanks, Doug, and good afternoon, everyone. Again, my name is Molly Mowry, and I am the executive director of a nonprofit that I co-founded called the Community Wildfire Planning Center. So our center works with communities on issues related to the wildland-urban interface, or the WUI, which I'm sure many of you are familiar with now. I am physically based in Colorado, but the majority of our work is in California. So one of the areas we've really focused on over the past 4 years or so is a partnership with CAL FIRE to train land use planners and fire officials and others around the state on fire planning related requirements and structure ignition concepts. We also provide a lot of technical assistance to communities on topics like WUI codes or plans, and sometimes we even participate in research. I am a trained and certified land use planner, and my professional focus has always been on wildfire. And I also currently chair the American Planning Association's Hazard Mitigation and Disaster Recovery Planning Division. So really happy to be here, and thanks so much to CCST for the invitation.
All right, thanks, Molly. And Michael, you're up.
Great. Thanks, Doug. Thanks, Molly. My name is Mike Peterson. I'm our Senior Deputy Commissioner on Climate and Sustainability at the Department of Insurance. I spend the vast majority of my time trying to address the risks that are faced by Californians for wildfires, extreme heat, and flooding. These are the major risks that where insurance has a possibility of playing a role in both the pre-disaster mitigation and the post-disaster recovery. California is one of the only states that has a focus on climate and sustainability. And so it allows us to use a lot of the data that are generated in our state and in other states to design resilient strategies that we can then use to help inform local governments. So I see myself as playing the role of trying to understand what are the factors, the risk assessment, the risk mitigation that go into a sustainable insurance market, and then how to communicate those factors and data to local governments to make the best decisions possible to protect people and also provide for a more sustainable insurance future. So thanks for having me.
All right, great. Okay, Judd, could you?
Yeah, thank you for having me. I'm a professor in the economics department at UC San Diego. My work all focuses on climate risk and adaptation in one way or another. And a major thrust of what I've been working on for the past 10 or so years is understanding the economics of wildfire risk in California and Western North America. In terms of specific problems that I'm really fixated on right now, I'm very interested in property insurance. I think that in a world of climate change, one of the best things we can do to adapt is to make property insurance function as well as it can, both because those markets, as Mike was just saying, are absolutely critical for providing financial protection to people who suffer inevitable losses in a world where we have more severe weather events, but also because there's a lot of potential to use insurance to steer and guide behavior towards efficient adaptation. So I'm very interested in understanding the economics of what's going on in these markets. And that goes, runs the gamut from individual behavior and how individual customers respond to their insurance premiums all the way to what sophisticated insurance companies are trying to do when they set their prices.
All right, great. And Sarah, could you wrap us up here?
Yeah, thanks for having me. I'm Sarah Atkinson. I'm the Hazard Resilience Senior Policy Manager at SPUR, the San Francisco Bay Area Planning and Urban Research Association. We're a nonprofit public policy organization based in SF, but we work across the Bay Area to advance research, advocacy, and education around 4 topic areas: planning and housing, transportation, economy and governance, and sustainability and resilience, which is my policy area. I'm from the Bay Area. I studied city and regional planning. In grad school, I did research on community resilience in the face of climate change and disasters, and specifically how land use, social cohesion, and property ownership impact a community's ability to adapt. And before grad school, I did a bunch of random stuff. So I'm actually, a little newer to this conversation than a lot of these other panelists. So I'm really excited to learn from everyone. But at SPUR, I focus on climate adaptation and hazard mitigation policy and research, mostly around flooding, sea level rise, earthquakes, and wildfires. And since SPUR is really focused on housing and trying to, come up with policies that deal with our housing crisis, much of my work is focused around housing and the interplay between land use and housing and building codes. And so I can talk about some of that today.
All right, fantastic. You guys have recruited a fantastic panel here. I'm looking forward to this. Actually, it was a challenge to get these questions together because you guys have such expertise. Just a reminder to the audience, there is a Q&A feature. If you have questions, put them in there. I apologize. There's no guarantee that I'm going to get to all the questions, but just stick them in there. Those are things that I can review and add to the ones that we're going to ask already. So I'm going to start us off with Judd. Let's do this because we want to ground people in what we're doing here. So how have California's recent experiences with extreme disasters, such as the devastating LA fires earlier this year, affected housing cost and insurance availability?
Certainly. So, let's start with insurance availability. Back before the LA fires, I think that we've had issues with wildfire insurance availability and pricing in California for a long time. In particular, the 2017-2018 fire season was a real shock to the system in terms of the availability and the pricing of insurance. And we've seen a variety of changes in the insurance market that we can talk about that have all many of which have gone in the direction of higher prices and less availability. There's also a lot of policy work right now that Mike can talk to us about that's trying to push those things in the other direction. But certainly we've had major shocks to the system from increasing wildfire losses and other catastrophic loss events. In terms of what that's doing to the housing market, historically these risks, I think economists would have said, were not really reflected in housing prices. And if you went back a decade or 2 decades, when you bought a home in a high hazard location, you wouldn't have expected for that to be a big factor that affected the pricing of properties. My sense of the market is that's really changing now, and that both because those higher insurance premiums are being capitalized into home values and because people are independently paying attention to those risks, we're really seeing interesting things play out in the real estate market too.
All right, this next question is from Molly. So based on lessons from previous disasters, what efforts should be prioritized to help reduce the costs of rebuilding and ensure long-term resilience? Because we saw what happened in Southern. It's expensive, I mean, that's a big issue.
Yeah, well, a big topic that I'm sure the other panelists could chime in on too, or the reasons why, is underinsurance. So, I mentioned I'm here in Colorado, and one of the studies or the events, I should say, we have a lot of data on in terms of underinsurance was the Marshall Fire. And I think that's a really good example of the scale of underinsurance we're seeing. So for anyone not familiar with the Marshall Fire, happened in late December 2021. It was a really dry winter, dry summer and fall leading up to it. We had more than 1,000 homes burn in a less than 12-hour time span. Scale of disaster was huge. That was just the start of it. What happened after that was a lot of people realized they were underinsured. And studies showed, in terms of looking at policyholders and their coverage, it was along the lines of almost 75% of people were underinsured. Of those, I think it was 36 were severely underinsured, meaning they really couldn't build back without substantial support and resources to help their rebuild. So, and we're seeing stories emerge from LA fires that aren't any different from that. I don't think we have the full data yet, but I'm sure we'll get that soon. And, I was reflecting on this a lot before this panel. Back in 2012, we had the Waldo Canyon fire, which was kind of the big wake-up call along the Colorado Front Range. And I remember we had a coalition of folks after that fire. I was engaged with some of the recovery and messaging afterwards and education. We were standing on the state capitol steps with our coalition of people saying, we need to get people properly insured for building back. Underinsurance back then was even a huge issue. So clearly we have a communication and education challenge that I think has gotten more press and more awareness, but this has been going on for a while. This isn't an overnight challenge. Related quickly though to, as we see underinsurance, we see a lot of creative ways, though, that some local jurisdictions and state governments are able to bridge some of those gaps. They might be waiving or reducing building permit fees. I know after the Marshall Fire, the county use tax, there was a rebate program. So essentially, as you rebuild, you don't have to pay all this additional tax on the cost of goods to rebuild. A lot of other rebates and discounts and incentives for rebuilding that can help bridge the gaps with underinsurance. Related to that, though, is as people may be rebuilding, if they don't have the cost to rebuild to the current code, and if the code is waived, or for example, one of the things we also saw was interior sprinklers. That requirement was actually removed from rebuilding. And so, or other things, people may not be able to voluntarily rebuild up to a higher performance standard. So, we never want to see a trade-off with being able to rebuild quickly, get people back to quote normal at the expense of resiliency, but that does happen. I know the state of Colorado had a housing recovery program that provided grants and loans to promote rebuilding with, fire-resistant building materials and energy efficiency measures. And a lot of people, if they had the funds, they did rebuild to that higher standard voluntarily. So in some cases, it's a matter of giving them those resources, first educating them on the proper amount of insurance coverage they should have, assuming they can get access to insurance, and then once they have undergone the event, how to bridge those gaps between, the shortfalls and where and how they can rebuild to that higher standard.
All right, great. So Sarah, want you to answer this. We're seeing housing costs, climate risk, and land use collide in ways that are forcing communities to make some tough choices. And in some cases, they're not making any choices. But from your perspective, what's one big shift we need to make in how we plan for long-term resilience? And you think about climate change, it is long-term and it is short-term.
Yeah, thanks. I think this kind of goes to your previous question too around costs and the way that, we're thinking about reducing rebuilding costs. We're thinking about how to reduce the rebuilding costs like right now and not always thinking about the long term of what it means to, like Molly was talking about, not build resiliently, not build to kind of the highest best standards for wildfire safety in these areas. So I think that's one piece that we really need to focus on is educating consumers. Also, insurance is such a great tool for getting us to think more long-term about costs. I'll mention we have a bill right now in the California legislature, AB 306, which is aiming to freeze building code updates across the state to try to reduce costs for rebuilding. And although this is like really well-intentioned, it's kind of this very broad like blanket bill that has a lot of potential negative impacts. And yeah, it's good in that rebuilding to current code, a lot of these buildings were older, is going to improve the resilience of these buildings, but it's not going to bring them to the point that they really need to be at. And I'm really inspired to see that a lot of insurers and banks and the community is really rallying around not, letting this happen and really trying to rebuild resiliently. And I know that there's an effort to have a resilient LA Delta fund, which is sort of like a private fund to support homeowners to rebuild more resiliently. And we can also talk about that a little later as we get more into the financial tools.
All right, Michael. So how can insurance be used as a carrot and not just a stick to get communities to invest in adaptation before disaster strikes? It seems like California is being somewhat responsible compared to the rest of the nation that you guys are investing in adaptation, but how could it be more of a carrot here?
Yeah, no, thanks a lot. It's there's a huge opportunity here because when you think about insurance, it really provides this cross-jurisdictional incentive. So if we needed to get every single city and county to adopt the same exact plan, that'd be really challenging. But insurance, it crosses all those jurisdictions in the pricing incentives that are built in. And so the degree to which those insurance policies, send the right signal as far as not only the importance of adaptation financially, but also like what exactly is it that needs to be done and in what order and in what priority. And that's a challenging thing to do. We've had fires in California. We have a Mediterranean climate. We've had fires for thousands of years. We've had a Department of Insurance for over 100 years. We didn't have prescribed incentives for fire risk reduction in insurance policies until 2022 at the end of that year. So we really are trying to move that direction as quickly as we can, but this does take time to come to fruition. So in 2022, we did write rules to require insurance companies to incentivize a more narrow suite of fire risk reduction at the home level. Those incentives need time to play out, but we also need to continue to make sure that information is communicated. And I think just lastly, to wrap up here, in the aftermath of some of these tragic fires, we've had the most recent example in Los Angeles, but this is in just my 6 years here at the department, we've had over 120 catastrophic fires that we've responded to, and if you look to Hawaii and Colorado and New Mexico, you see many more. In each of those circumstances, there are opportunities to really get ahead of future fires in a way that I think that it's one of our best opportunities to adapt as holistically as possible.
All right, I'm going to go back to Judson here. So when it comes to wildfire, one of the toughest challenges is figuring out what to do with the huge number of older homes in high-risk areas, places built with wood siding, attached fences, and other features that make them especially vulnerable. What are the most cost-effective ways to protect these homes, and who should be responsible for making that happen? And I could see where, one house has the resources to make themselves more fireproof, but then they are surrounded by homes that haven't invested in that, so it kind of defeats the purpose.
Yeah, I think you put your finger on absolutely a core issue, right? So we were just having this conversation about rebuilding, and one of the reasons that rebuilding or the new build time is such a great time to invest in structure mitigation and vulnerability reduction is because it's so much cheaper to do it if you do those things when you're already in there building the home. And if you're a person who owns a home that was built decades ago and you're trying to now retrofit that home to add things to make it more resistant to wildfire or hurricanes or hail or whatever risk you're talking about, it just is there's a lot more cost that goes along with that. And so one of the toughest challenges we have in California is that, of course, once we build homes, they last for decades. They're long-lived, fixed capital investments. That's what a nerd like me would say. And so the question is, how do we figure out what is cost effective to do for these homes that are in high hazard places, accepting the reality that a lot of the things we can do are going to be really expensive. And so we're going to have to think carefully about, which investments have a high bang for the buck, and what are the things we can do that are relatively cheap that are going to generate a lot of vulnerability reduction. And CAL FIRE has put together a great list of what they call the low cost retrofits. And the other thing that we're going to have to be really thoughtful about is how to design our incentives so that we encourage people to do the low hanging fruit. And also, and this is controversial, that we don't over encourage investment in things that may actually not pencil out. There are some places where the risk of a wildfire is meaningful, but it's not high enough that it justifies necessarily replacing the roof on a roof that's not ready to be replaced anyway. And so there's kind of a cold economic calculus of what's cost effective and what's not cost effective. And that's a place that I think we need a lot more work to really be able to pin down what those investment returns are and what those investment costs are, so we can make those trade-offs thoughtfully. And the last thing I'll say before I pass it back to my colleagues is you put your finger on another important issue, which is these investments don't only benefit the person that's making the investments. They also, we know from lots of research, have really important effects on what happens at neighboring structures during a wildfire. And that kind of neighborhood level spillover dynamic means that there's lots of reasons to think about incentives and tools that not only target individuals, but also try and work at the neighborhood level.
All right, great. Sarah, I'm going to come back to you. So what are the short and long-term impacts of decreasing insurance availability? And I'm based here in Tucson, Arizona, but I'm originally from Florida, and I've covered Florida a bunch of my podcasts on just the bonkers nature of insurance there. And, I think of managed retreat and how do you get people to think about leaving coastal areas? And I don't know if California is thinking like that, but, what are some of these solutions like that?
Yeah, I mean, short and long-term impacts of decreasing insurance availability, we've talked about a lot of them, but obviously underinsured homeowners leaves them exposed to disasters, opens them up to long-term financial instability, increased housing costs, barriers to home buying, which can create market instability. In the long term, kind of what you were mentioning, often there's a disinvestment from high hazard areas because it's just not financially viable to continue to rebuild. So some people will stay and be unable to move, and some people will leave. And infrastructure might start to not be maintained as readily. And actually, in New Zealand, after the 2011 earthquakes, they had a voluntary buyout program from this area, which they determined was red zoned because it wasn't really financially feasible to rebuild a lot of the homes that were damaged after the earthquake. There was a lot of liquefaction and land movement there. And so the government offered to buy out a lot of homes and basically said, we are not going to maintain the infrastructure here. So you can either take this buyout or you can stay here. And, we're not really having that conversation in California. At least, the governor has really pulled away from having that conversation. I do think it's a really important thing that we need to start to talk about. And the federal government has supported buyouts in other locations, mostly around flooding. And I think that it's something that we do need to be having conversations with community about what does this mean? What could this look like in the long term? And really starting it from a place of voluntary and giving people options to leave if they want to. And then the other impact I'll mention, which is interesting in my work with local governments, is there's really a concern around with insurance becoming less affordable and reducing land values and property values. Cities are really worried about the reduced property taxes that they're going to be able to collect, which means reduced municipal budgets. And at the same time, they have all of these infrastructure needs to try to upgrade their infrastructure for climate change. And then also the bond market is becoming a little more unstable because of climate change. For example, the S&P Global Ratings downgraded the bond rating of Los Angeles Water and Power because of their kind of risk of wildfire. So there's all these kind of challenges in the financial market of how to support even investing in infrastructure and investing in improvements in infrastructure for climate change. So all of these things really impact each other, and we need to the beginning issue is almost the insurance issue, and then everything kind of extends from there.
Okay, Molly, let's talk about some of the tools that are out there. Are there examples of different financial and land use tools that could be used to help better plan for disasters? Obviously, wildfire, just toolkits and such.
Yeah, thanks, Doug. I mean, this is probably the most common one is the local hazard mitigation plan, pre-disaster. That's really for any kind of hazard that the community identifies within their planning area. So, that's looking at all hazards, it's looking at populations, property, critical facilities, and really it has a mitigation strategy. How do we deal with these hazards and reduce the risks? There is a financial incentive in California. Back in, this was, I think, 2006 that this assembly bill passed. But if a local agency adopts and incorporates that LHMP, the local hazard mitigation plan, into the general plan safety element, they get a funding incentive that basically they're authorized, the state is authorized to use available Disaster Assistance Act funds to cover local shares of their non-federal portion. I know that's a little wonky, but I guess the point is if you have an LHMP, keep it current, and there is a strong financial incentive to link it to your general plan. Another plan that we advocate for strongly, especially for wildfires, the community wildfire protection plans. I won't go into a lot of detail on that, but those are very hazard specific to obviously wildfire. We just collaborated really closely with CAL FIRE and some others to develop a CWPP toolkit. So I can pop the link in the chat here to share out, but that's available on CAL FIRE's website. It's a really good planning tool for any community, especially interested in wildfire. And even if you have one, the other part is to look at it, see what's in it, see what's prioritized for addressing wildfire. Also, because my focus is wildfire, I just finished writing an article for APA's planning magazine, and in that process, I got to research and talk to LA County planners and Maui County planners and Colorado planners after, post-disaster wildfire events. And so I will also share that article link because the purpose of it was to really highlight, well, what can planning departments do pre and post disaster for wildfires? So, for example, LA County, after many disasters, not just wildfire, but the Woolsey fire and some other disasters, they had the experience of, well, let's adopt a recovery ordinance so that rather than and have it in their zoning code. So rather than every single time they experience a disaster, that ordinance is already ready to go, and it establishes procedures like where's their temporary housing going to be, or what does that look like for displaced residents? What does the replacement process look like? So there's just a lot of predictability to the process as opposed to let's figure this out every time a disaster happens. And then Maui County, I highlight in that article, they did a really fantastic job with what's called a long-term recovery plan. They put that together after the fires, but that plan will serve for many years. So as funding comes in, they're able to point to the plan and say, what's our roadmap for recovery? What are our priorities? So it's not, so it's an as organized as you can be in long-term recovery. It helps everyone identify what the priorities are during the rebuild and recover, long-term recovery.
All right, thanks. All right, Mike, I'm going to put you on the spot here. You've been hearing all this. So what kind of policy changes is your department looking at to turn the tide on insurance availability in the state? Easy question.
Yeah, no, appreciate that. And I just say that this is something that we've been working on for several years now. I think, dating back to 2021, we had a climate insurance working group where we had almost 20 experts from across environmental groups and public policy experts put together 40 recommendations. And we really are just going through those recommendations and trying to basically take care of the actions that are going to provide the most sustainable insurance environment. And that has to do with starting point, and this is kind of what I want to focus on, is how do you assess risk? Because in the insurance sector, one of the things that's really in alignment with climate adaptation is that it does react to the risks that are in the areas where they're trying to insure. And so for 3 decades, our department in California has had rules that prohibited catastrophe modeling from being used in insurance company rate filings. What that means is that insurance rates were calculated in part by looking at the last 20 years of catastrophes and what that meant for next year. Now, as you know, the environment in California has changed quite a bit over the last 20 years. There have been places that have become more risky because of drought and heat. There have been places that have become less risky because of risk mitigation. And there's a heck of a lot more homes in places in the WUI that didn't exist when some of these catastrophes were occurring 20 years ago. And so last year, the department made the largest reforms we have in 30 years, which was to incorporate catastrophe modeling into rate filings and what they call reinsurance, but basically the buffering that insurance companies use against these high cost catastrophic events. And we basically took both of those risk assessment tools and sort of put them into our new regulations, and that just got completed at the end of 2024. It's being implemented, as we speak, and we do, expect to see insurance companies filing new rate filings in the fall with those two tools integrated. And so what that'll mean is that there'll be a clearer view of next year's risk from the way insurance is priced. And that will incorporate then more of the risk mitigation actions and climate adaptation that's occurring. It'll also include some of the drought and changes that we're seeing in the environment and the increased construction that has occurred in some of these WUI areas as part of that calculation. And so I think that the goal to that is that it will help stabilize insurance costs and insurance availability. But mostly that policy is something we're excited about because it's connected to insurance companies committing to write more policies in some of the higher risk areas. And so the insurance companies themselves see this as a way to be able to write more broadly in the state. And we can't really have a big debate about affordability until there exists policies in some of these areas. You can't fight over something that doesn't exist. So we do need that growth in those areas in order to really sort of push that insurance access to more and more people. So that's the policy changes that we're currently in the midst of pursuing. I think there's a huge opportunity for research moving forward because a lot of funding is spent on risk mitigation, but I don't think that the analysis of the performance of that risk mitigation is really broadly shared. And so I think that the more we know about the success of some of those risk mitigation strategies, the more that can be incorporated in insurance and the more that can be incentivized for communities moving forward. Because Jen said something that I think was really important, which is that we think of insurance as home by home by home, right? And that we're incentivizing, stronger roofs, better defensible space, but ultimately these individual actions impact neighbors and those neighbors impact the whole community. And local governments have a lot of incentive here to reduce risk because that community, if there is a fire there, that's going to destroy, local government infrastructure that is largely uninsured. That will need to be rebuilt. It'll affect tax revenues, which are an important source of services. And so really like that risk mitigation at the neighborhood level, it kind of scales up to the local government as far as like where there's a lot of incentive to try to do the most resilient job as possible when it comes to ordinances and infrastructure.
Yeah, can I add something to that too?
Sure.
One thing I think that's going to be very interesting is as we move up to that scale that Michael was just talking about, is there are more complexities and nuances in the way we look at the big picture. So, a lot of the conversation has shifted to, well, we could potentially, as one mitigation, just have structures further apart, right? Because if we don't have structures as close, they don't burn, it's not home-to-home ignition. That sounds great. Scientifically, yes, that makes sense. However, as a planner, I'm a strong advocate for, well, what are the trade-offs of having homes that are further apart? We know, especially in California, we have a housing crisis. And so we have to look at these solutions in tandem with other ways of becoming more resilient and sustainable, or whatever word you want to insert there for a forward-looking future. And so I think we don't, we need to be cautious in how we look at the mitigations more holistically in alignment with other objectives that communities have for sustainable growth in a future that works.
All right, great. Thank you. Jed, I want to go to you now. And so it was shared with me, the First Street Foundation put together the 12th National Risk Assessment. And if the organizers have access to that, if they could stick it into the panel there. And my question to you is that the report shows that traditional drivers of home values like jobs and schools are being overtaken by climate risk. How should economists and planners rethink value in these markets? And I'm surprised that climate risk really is elevating that quickly, but what are your thoughts on that?
Well, yeah, so I haven't read that First Street report. I'm familiar with a lot of the stuff that First Street does. I first of all, I think schools and other things are going to continue to matter a lot. So, climate risk is becoming more important, but let's kind of level set here. I don't think we're ever going to live in a world where people don't care about the quality of their local schools. That said, climate change certainly seems like it's starting to matter more and more in home prices. And in particular, I think we're seeing that play out through the pricing of insurance, the availability of insurance, and particularly in areas on the coast, people looking forward and imagining that this property may be inundated in a relatively short period of time. And so, what do we do about that? That's going to cause. I mean, that's a big question, right? There's a lot. How do we sort that out? A very narrow economic answer to that would be we can just let the market sort it out. The market will do something. It's not obvious that the market will do the best thing for everyone if we let the market sort it out on its own. And so I think that the real interesting policy questions for me are, where are there places that smart policy interventions can move outcomes in a direction that works better for everyone? And where are there places where we can rely on markets to sort these things out on their own? Presumably, if the risk of wildfires or the risk of floods or the risk of hailstorms makes it a lot more expensive to live somewhere, over the long run, that is likely to reduce the demand to live in those places. But do we want to wait to let the market sort it out on its own, or can we end up in a better place if we think carefully about ways that we might be able to intervene and steer and nudge?
All right, I don't know who this next question's for. Raise your hand if you think you could answer it. And this has come up a few times, and this is a question from the audience that I think is really important. So with our growing rental population, how can we support communities with a large number of renters in recovering from climate disasters? And I think of California, and the real estate is so expensive. Renting is such a big part of things there. And so who wants to take a crack at that? Who could speak to sort of renters and such and how they might be impacted? Come on, guys, batter up.
I can try.
All right,
I'm a
Sarah, thank
renter.
you. Okay, perfect. First-hand experience.
Yeah, I think renters are thought of as, not having as much of a stake in, especially like the rebuilding. They don't own property. Um, I think that making sure that renters and community members are really engaged in any type of rebuilding after disasters and making decisions, and also, provided with options for being able to return or being part of the conversation about maybe this not being a place to return to. I think that's a really key aspect of it. I think also, there was a lot of price gouging after the LA wildfire, and people being charged or like rents going up for vacant units. And there was, I believe the governor put out an executive order that stopped that from happening. So those kind of like quick responses and paying attention to what is happening in the rental market is really important. I don't know if that's like the best answer to that question, but those are some of my thoughts.
No, thanks for taking a crack. And thanks to Whitney Denary for the question. Sorry, I didn't mention it. And so I wanted a question from Hannah Hageman. And Molly, I think you might be able to answer this, and just say you can't at the end of it if you can. So are there any examples that panelists can speak on in California where high-risk fire communities are relocating/abandoning high-risk neighborhoods in a locally, regionally government-backed program? I understand Santa Cruz has discussed such a program and received some level of interest from homeowners, but has not been implemented yet. And I guess maybe you're experiencing Colorado too if something like that happens.
Yeah, it's an intriguing question, and I think the data is there's not uniform data around it. I'll say there's a lot of anecdata around communities, like after the Dixie Fire, for example, Greenville is rebuilding with success so far, and yet some of the more rural areas that were affected by that fire are not able to quickly rebuild, if at all. And that's after talking to a lot of folks from that area. Part of it is insurance, affordability, or availability in general. Part of it is just they don't have access to the resources. So there's almost like an ad hoc, unplanned, unmanaged retreat in some areas. I'm not familiar with the Santa Cruz example, but overall, the experience, like for example, with the Dixie Fire, tracks with a more recent study from Paradise, actually, which has some really good data on who's coming back, who's not coming back, how many people have come back. Essentially, there seems to be a trend. It's most difficult for rural folks, and there is definitely data on socially vulnerable folks that cannot recover or rebuild as quickly, if at all, in some cases. And so we are seeing areas in, I'll say, the very high fire hazard severity zones, or you could call them high risk wildfire areas in parts of California, that are moving out for various reasons, whether or not they've experienced fire or they're not yet having experienced fire. But the idea or the concept of, quote, managed retreat and buyout programs has not been established. And I think, at least from my professional view, there are a lot of questions around it. It's been very successful for other hazards, sea level rise, flooding. But for wildfire itself, there's been a lot of us starting to get interest in it, but I think there's a lot of question marks too as to how that would be prioritized. And as Judson, I think, said earlier, is there really economic value in spending potentially, hundreds of thousands of dollars on a property that may or may not burn in the future, and can be managed? We have a lot of tools to mitigate fire, and so should that investment go to buying the land, or should it go to mitigating the property and maintaining it?
All right, Mike, this question's for you, and it's from Harrison Ray.
Sorry, Doug, can I?
Oh, go, please.
Sorry to step on it. I just want to respond to something and I think Sarah might have had a response too, but I want to build on the end of what Molly said, and maybe this will generate some controversy among the audience, which will be fun.
Good.
A lot of our intuition about this idea of what we call in the climate literature managed retreat comes from flood and sea level rise. And those are settings where we have a lot of what we call severe repetitive loss properties, where you have homes that flood this year and you have every reason to suspect that they're going to flood again, 2 years from now and again 2 years after that. Or you have homes located right on the coast and, there's every reason to suspect that in 20 years they're going to be underwater. And so in that setting, I think there's a clear case for abandonment of places that we have development right now. I'm not saying that there aren't also places where fire risk may justify abandonment, but I think it's a more complicated line of reasoning, exactly like Molly was said. So if you think about a given home that has what we would consider to be a very high probability of experiencing a wildfire in any year, that probability is going to be like 2%. A 2% annual risk of a severe wildfire is a really high risk, according to most of the models. That's really high on the one hand. On the other hand, if you take that literally, that implies a 50-year return interval for that event, right? And in a state that has a housing crisis, it's not obvious that we want to abandon properties that someone might be able to live in for 50 years on average. Although it becomes very important to make sure that we're doing everything we can to mitigate, like Molly said, very important to make sure we're doing everything we can to protect life safety. And then really important to make sure that people do have insurance, because eventually that fire is coming and we want to make sure that people are financially protected. So that's a little bit of a hot take and a rant, but this question of whether we should be doing whether we should be doing managed retreat for wildfires, I think really important.
Sarah, did you want to weigh in there?
Yeah, I will not be super controversial. I think that Judson is right. I think that the one place that we do need to be thinking about this is in the multi compound hazard areas, especially where the wildfire happened. Some of the homes that burned were along the ocean and are going to be experiencing sea level rise and flooding. And those are places where I think it is really important to start thinking about, because it's then not just the potential for wildfire destruction, it's the potential for those homes to have to be protected through a seawall or some other sort of public infrastructure investment that maybe it doesn't make sense there to rebuild. And that's my hot take maybe on the other side. So yeah, I agree. I think that it's a complicated retreat is a complicated question. And I think the other thing I'll say is that right now, or sorry, the homes that the areas that were burned are mostly single family homes. It's really low density housing. And is there an opportunity there to actually think about the housing crisis and creating more density, but creating it in a way that is smart and resilient so that we could actually have more housing in that area?
Okay, it keeps coming up, and I just want to ask the panelists and actually the audience too. You could weigh in the Q&A. So in a couple of weeks, Columbia University is hosting a managed retreat conference. We've brought up managed retreat quite a bit here, and I'm going to be attending that. And it goes back quite a ways, and you usually associate coastal adaptation and flood zones with the managed retreat. Is anyone here going to that conference and from the wildfire? Because you rarely have those sort of panels and presentations using wildfire as sort of a justification. Are any of you guys, the four of you? Okay, there we go, wildfire. And from the audience too, if you are going, I'd love for you to just weigh in. If you are, why are you going? If you're from California, and yeah, I will be there. Okay, I'm gonna go, Mike. I'm gonna come back to this question because I liked it. This is from Harrison Rain. Are there any planning or insurance strategies or best practices that are available to incentivize residents of neighborhoods to take collective risk mitigation action? And I like this. This is really interesting to me. Perhaps in the case of HOAs, and maybe not in California, but have you heard anything getting down to this micro level?
Yeah, no, and I think there's a lot of power there. What we've seen in terms of discrete examples is that you do have communities who will put in a specific ordinance that says, okay, every home is going to do A, B, and C. That in the rebuilding process, the town of Paradise did that with the areas around their homes, and so you do see that sort of collective action in the rebuild. But HOAs present a really interesting opportunity because many HOAs have sort of a commercial insurance policy. So they're already linking themselves together in like some realm of insurance, not for the individual structures that might be in them, but there tend to be already these linkages. And you have an organized group that can all do the same thing. And that is something that insurance companies react to. The challenge has always been in the devil's in the details, right? We have good experimental research and good observational research on how a structure either survives or doesn't survive a fire. Every neighborhood looks a little different. It makes it difficult to really do that. And so you have different approaches, all that, have some, I think, arguments as far as, looking at, after a certain, specific fire that's coastal versus in the Sierras as to what a community can do together. But we do have fire risk reduction communities, which is a state designation where the communities decided to go above and beyond in a certain kind of program. And there are a lot of experimental approaches trying to look at either like a community insurance policy or a community mitigation plan that's not exactly the same as what you might find in what's used for FEMA funding and things like that, but that really focuses everyone in a certain direction. Again, it kind of comes back to like, what are the top 5 things to do in that community and how are you going to fund it? But I do think that is something where collective action has a lot of impact. And if we had, clear data gathering, I think insurers would react to it.
Well, I'll just quickly add on the HOA front, because this is kind of a minor but interesting story. After Marshall Fire, a lot of HOAs banded together because they had in their CC&Rs like maybe they had to have a fence, right? Or they had to have or a wooden fence in particular. We always say, well, the houses have to be a certain color, but there's a lot more to it. So they were successful in getting legislation passed that basically says if there's anything that, I think I'm going to get this right, if there's anything that would be, a fire vulnerability on their structure or their lot, they don't have to follow that. Essentially, like they can go outside the bounds of what their HOA requires if it's in the name of fire safety. I'm sure there's more details and you can Google the legislation, but it was a success story that came out of that, which is sometimes a tricky thing for homeowners to navigate.
And if I could just add one thing onto what Molly said, because I think sorry, go ahead.
No, go, you go.
It's a really interesting example of like what, kind of what falls into like what the state can do versus what has to be generated at the local level. And a lot of this is like, adaptation is especially for wildfires often at a local level. But a couple of years ago, as one of those climate insurance working group recommendations, we did sponsor and get legislation passed where there's now authorized climate resilience districts that can be set up, large or small, that sort of try to handle these sort of cross-jurisdictional risks like wildfire that it might be a little bit too big for what the questioner is asking in terms of collective action, but it is another way to kind of provide that organizing capacity to do those collective action things and maintain them.
All right. Any follow-up? I was going to ask Judd a question now. You guys are asking some really great questions from the audience. I'm having trouble keeping up with my own questions here too. But all right, from Jill Horing for Judd, does the concept of a moral hazard apply to insurance pricing in California? And if so, do you have any perspective on how policy interventions could mitigate this?
Okay, so conveniently, I just taught moral hazard in my intermediate microeconomics class yesterday. We're at the very end of the quarter here at UCSD. So for the civilians in the audience who don't know what that means, moral hazard in insurance pricing means if you're fully insured for the loss, no matter what you do, you may not have an incentive to do all the things that you can do to reduce the risk of loss, right? So yes, there are questions about how significant that is relative to all the other things that determine whether or not someone manages defensible space around their homes. But certainly in theory, if there's no incentive in your insurance contract that rewards you for taking actions to make your home more fire safe, then you're not going to have an incentive to do it, and you're going to be less likely to do it. There are other reasons that people don't do those things as well. So the moral hazard model suggests that people are very sophisticated and they know that there are all these actions they could take, and they're just choosing not to take them because they're, they don't get appropriately rewarded for them. I think most of the survey data that I've read suggests another really important problem, maybe a bigger problem, is people just don't pay attention or aren't aware of these things. And so when you send them these signals through their insurance price, that potentially changes their behavior, but not because they were, being super rational before, but maybe because they weren't paying attention. I will quickly say, though, moral hazard is potentially very important in the fire space more broadly. And one of the very first research papers I ever wrote about wildfire thought about this issue that the people who approve new developments in potentially very high fire hazard locations are generally like local governments. And the people that pay to protect those homes from burning down when big fire comes is usually the federal government and to a lesser degree the state governments. And so this is not about insurance pricing, but it's about zoning and land use. There are some interesting split incentive programs about who's approving developments in given locations relative to who's paying to protect them.
Sarah, anybody have anything they want to weigh on the moral hazard? It's always a tricky one. Sarah, the question for you is, what would you say to a community that knows it's at risk, but politically it's just not ready to talk about managed retreat or zoning reform? And that's probably a lot of communities out there.
That's a hard question. I mean, I guess in terms of if they are really not ready to have that conversation, of course, I would try to push them to have some of those conversations. Some other, places where they can potentially take action. Local parcel taxes are kind of a new, not a new tool, but a tool that a lot of communities are using to reduce wildfire risk in their areas. So Oakland in November passed a wildfire prevention parcel tax that's just on locations in the hills that are the most at risk, on property owners in the hills. And that funding, that's going into a fund that now is going to do sort of a district-wide wildfire mitigation program. And Marin is also doing something similar. So they can tax themselves to do these investments and at least do some of the mitigation, the district scale mitigation. And I think outside of that, yeah, maybe going back to the question that one of the audience members asked about just doing more collaborative and community-based actions and trying to at least do those home mitigation actions as a community so that they're more effective.
We'll leave that off the marketing, tax ourselves. We won't use that kind of language. So we talk to the
Yeah,
community.
it's not the most popular. And I will say it has a lot of equity issues where a lot of communities do not have the capacity or desire to do this. And yeah, it does create some sort of splotchy mitigation because some communities will do that and be able to invest in the mitigation that's needed. And then the community next door just doesn't have the capacity to. So it's definitely a complicated one, but if you're not ready to have conversation about other things, it might be your only option.
Mike, the question's for you, and the other panelists can weigh in also, and coming from the state. So and this is from Erica Berman, private citizen, and this was submitted earlier. Although much can be done on a local and state level, the elephant in the room is the loss of federal government as a major source of funds and expertise. How do you envision overcoming this deficit? And so California obviously being very responsible in a lot of areas, but the feds still can be a major partner in all this, and we're seeing a big backtrack there.
Yeah, absolutely. I mean, I think that I think that we have a lot of information that's at our fingertips today, and we have to sort of plan for the future of how are we going to continue to get that information? The insurance sector is really built off of how can we understand the probability of catastrophes in a way that can lead to writing of insurance. And so there are catastrophe models that are used by the insurance companies in order to figure that out. One thing that we've tried to start the process on in working with Cal Poly Humboldt, as among others, is to sort of have a strategy for how do you get to a public wildfire catastrophe model in California that can provide some of that same information on a public level to the state, local governments, private citizens, community groups, so that that risk information is available, widely usable, and can really kind of fill in current gaps. But looking to the future, I think it is a challenge where we need to be very sort of aware of where there could be future data gaps. And I think that this is a problem not just for, I know we've spent most of this is on wildfire, but if you look at sort of across the spectrum of different perils, wildfire has a significant insurance uptake in California. Only 2% of households in California have flood insurance. Extreme heat is rarely insured. And so in some ways, information that helps project atmospheric rivers and extreme heat events is almost even more critical because there isn't that insurance resilience sort of built into some parts of the community. And so I do think it's something that really needs to inform how we prioritize risk mitigation, how we plan for risk, how we react to it, and hopefully some of our own universities can work on some of those projects and really just produce more actionable information from the public. And I'll kind of end with what you sort of already shared, which is that there are groups like the First Street Foundation where it's not a perfect match for what the federal government does, but it is useful and it is something that maybe can help fill some temporary gaps.
All right, thanks. Molly, I have a question for you, and we're at that stage of the panel where I get to ask maybe some more fun questions. And if you had a magic wand to change one land use or housing policy in the US, what would you fix first and why? You're sitting in one of those meetings there in Colorado and you're like, oh, if we could only do this. I mean, even though you think this is never going to happen, let's just hear that pie in the sky idea.
Is this an audience question or a Doug question?
This is Doug question. You think the audience would have something like that? No, this is a Doug question.
Oh gosh, I feel like every panel has a magic wand question, so I should know this by now what my answer would be. But I think after having gotten to talk to, like I said earlier, Maui County and LA County and folks in Louisville and Superior, I'm not sure it would be my one thing, but I have to say the long-term recovery plan that Maui County worked on, granted it took the disaster to do it, but they built it off of a lot of other planning efforts that they had been doing. So it wasn't like it was out of the blue. It actually, helped really reinforce other planning projects that they had already undertaken and kind of build them into the future. If my magic wand could be, if everyone could do that before the disasters occur, like come up with the plan, come up with how you would even have a website. If you all of a sudden lost 2,000 homes or even 400 homes, what would you do when you woke up the next morning? And I think forcing departments to build a website of what information do we need to give? What's the process we would need to tell people to do? Where do they start? What kind of building permit and, rebuilding process are we going to allow? I actually, in my dream world, that would go a really long way to helping people prepare in advance of the next disaster. So having that, like forcing them to do that on the front end instead of waking up and saying, oh my gosh, where do we start?
All right, this question could be for anyone here, and maybe raise your hand. So, especially if you're not based in California, you look at the massive fires in Southern California, and we're seeing all these rebuilding efforts and trying to get people back into their homes. And Pacific Palisades obviously got a lot of attention, it just got really hit hard. But thinking about everything that we talked about today, is this the right thing to do to rebuild in a place like Pacific Palisades? Not only is there a future fire danger, but then also the associated cost with it. And obviously, we want people to get back into their homes or where they used to live, but we're kind of tiptoeing around some things here too. And I know there's some commissions and there's some work happening in Southern California to have these tough conversations. But I mean, is this what we should be doing? I should start with Mike, the state guy. No, I'm not going to do that.
Well, I can stick my neck out there.
All right, and you guys ponder that because this is a lot of this has to do with like, should we just be doing this based on all the what's happening out there? But please, Molly.
I think when it comes to fire, there are places that can be rebuilt. The question is how they are rebuilt. There are some places that maybe should not be rebuilt if the development cannot be mitigated properly. So for example, if you're up a narrow canyon perched at the top of a hill with whatever the weather is that's going to always push fire up to you, and there's only one way in that's 5 miles long, that's probably not the best place in terms of whether you can actually mitigate that. But places in Southern California, they can be mitigated. I think the real challenge is closing the gap between how to bring them up to code, even if they aren't subject to the codes right now. How can we come up with funds? As Judson, I think it was Judson said earlier, it's so much cheaper to rebuild now, incorporating those features in the landscaping and the building construction.
Anyone else want to take a crack at that? Mike.
I'll take the more practical lane on this, and that is that, you know, that's just not a sort of a state level decision to make. Like individuals who choose to rebuild are going to, I think the best thing we can do is put a lot of our emphasis in the clarity of what risk mitigation looks like and will be effective, and how can we fund that. I think that's really, because I mean, you see these studies that come out, and the amount that you're going to save in future costs, whether it's insurance costs or response costs, for a community that's been mitigated the best as possible versus not, are substantial. And so I think that that's really the practical question, is like that these choices are going to be made by other folks, and if there's a commission that's going to do, that's great, but within that lane of like, how do you get this information to people in a way that is understandable, and so that these choices can be made as best as possible, because this isn't the last fire, this is not the first fire. This is where I think this, at least speaking from my position, that we can provide the best service to our states here, is to just be like, insurance can't be an afterthought anymore. It has to be something that we think about right now. And here are some mitigations that insurers react to, and that react to risk. And so anyway, that I think is really the sort of practical thing. And if the choice that after that by the local government, by the individual, is to not rebuild, like, they can take their insurance, payout and move at that point. And so I think that that's just empowering that local decision making, is at least we're all land on this question. So.
All right, we have about, a couple minutes left, and I would have one last question. I'm going to ask this to you, Sarah, and this is important to me, and I do want you to be sensitive to time. And so I do climate change communications, and a lot of the talk here is about immediate impacts and such, and a lot of times climate change doesn't even come into this. And so they're not equating fires and the rise in insurance costs with climate change, but it's happening, and it will keep happening indefinitely. So how can we integrate climate awareness with these more immediate issues? I feel like we miss out on a lot of teaching opportunities if we don't keep doing this. And yeah, if we could keep that relatively short. So, Sarah.
Yeah, that's a good question. I actually am going to give it to the group, because I'm not sure I have the best answer.
Well, maybe does anyone want to take credit? You only got probably 30 seconds or a minute here. Maybe that was me just sort of pontificating on, okay, climate awareness, please factor this in when you guys are out there talking about those things. And you know what? On that note, I'm going to do that because I do need to wrap this up. And so I just want to thank the panel for participating here. And so if you didn't think insurance premiums could drive up land use decisions, well, welcome to 2025. What we've heard today is that climate risk isn't just reshaping our maps, it's rewriting the fine print of the American dream. Put a little thought into this, but we've also seen there's room for smart planning, creative policy, and maybe even a little optimism. So whether you're a planner, a policymaker, or just someone trying to keep your house insured, this is the moment to get serious about resilience. Talk to your neighbors, talk to your leaders, and please talk to your zoning board. And I'm going to turn this over to Jason. And again, thanks to the panel, and thanks to the organizers for inviting us all to participate, and thanks to the audience for joining us.
Well, thank you so much, Doug, and hello, everyone. My name is Jason John. I'm the Deputy Director of CCST. I want to add my thanks again to the extraordinary panelists, as well as to the staff across our three organizations who made this possible, and a further thanks to the hundreds of you who joined us in the audience today, especially those of you who submitted such thoughtful questions. If you would like to watch this briefing again or share it with a colleague, it will be posted on our website soon. And please stay tuned for the announcement of the third webinar in this series, which will focus on the effects of disasters and climate change on transboundary migration, including the implications for economic and human security in border communities. We're aiming to hold this briefing in late September. Apart from this, CCST will also be holding an expert briefing on electrical grid build timelines, where panelists will discuss the challenges faced by California's energy grid due to increasing loads from EVs and data centers. This briefing is scheduled for midday Pacific time on Tuesday, June 24th. Please look out for an announcement from us and for a registration link. And one more time, thank you all so much again for joining us today. I hope you all have a wonderful rest.